Welcome to Key Factors Podcast, where knowledge meets ambition in the fast-paced world of real estate and mortgage. I'm your host, Mark Jones, bringing you the latest insight, trends, and expert advice to navigate this dynamic property market. In each episode, we dive deep into the heart of the industry, dissecting market movement, exploring investment strategies, and unlocking the secret to real estate success. Whether you're a seasoned professional, an aspiring investor, or simply looking to stay ahead of the curve, this is the ultimate guide to making informed decisions in the world of property and real estate. So grab a seat and let's uncover the key factors that make all the difference. Welcome to Key Factors Podcast. Let the journey begin. And we're back with another episode of Key Factors Podcast, Real Estate AF, where the AF stands for and finance. And I'm your host, Mark Jones, and we are powered by ReviewMyMortgage.com, the largest index of mortgage programs in the nation. And in this discussion, I brought along somebody that I look up to, both from a literal standpoint and kind of from a physiological, whatever you want to call it, standpoint, but somebody that has walked the walk and talked the talk. So when he mentioned that he was coming to San Antonio to visit and see how everything was going, I asked him if we could jump in the box again and see if we can't get a discussion that many others out there could possibly benefit from. So without further ado, I would like to introduce the owner, founder, and head of the golf coordination at Mann Mortgage, Don Mann. Don, how you doing?
Doing great. Great. Good to be here with you.
Awesome. So our last time that we had this time to have a discussion, it was really brief and we didn't get to talk much, kind of rushed. I'll be honest, I was nervous at the time, like, holy shit, it's Don Mann. I don't know what to talk about.
I'm a scary guy.
Yeah. But since then, I've gotten to know you more. I've gotten to be more ingrained within your company, your organization, and what you guys do. And now it gives me kind of the ability, the confidence to ask you a little bit more, to dive a little bit deeper into who you are and how Mann Mortgage came to be. So that being the case, I want to ask, Don, how the hell did you get started in the mortgage business? Where'd you come from?
Well, I'm a North Dakota native, right? And went to college at the University of North Dakota and graduated in 1970.
Okay.
Were you around in 1970?
I was not.
Oh.
I wasn't even a thought in the eye, as they would say.
And how many people these days were around in 1970, but thankfully I still am. But,
yes.
So yeah, I graduated from college, and the first thing you do is what am I going to do for a living? I had a business degree, and so 71 was kind of a bum year. 71. It was kind of after the Jimmy Carter era. Right
around hippies started coming around.
Yeah, and Vietnam War was kind of just getting over, and but anyway, I went looking for a job and just was having a tough time. And I happened into my local bank where I had my checking account.
Okay.
I knew a guy there. I thought I'd just go see him and see if he's got any ideas for me on what I should do for a living. And lo and behold, he says, gosh, we have an opening here at the bank. It's kind of an entry-level officer, assistant comptroller kind of a job.
Okay.
I bounce checks and balance the bank's checking account and kind of help the tellers and stuff like that.
And at that time, did you have any banking experience other than what you personally did with the bank yourself?
No, none.
Okay.
Not at all. So it's kind of where I started in the banking world. And this was a small local bank. And it didn't take me long to recognize there's two good jobs in a small little bank like that. One is the president and or owner, and the other one's the comptroller because he's the beankeeper, and it's important what he does. And so, I guess I was there for 3 years and then recognized that you got all the prestige in the world working for a bank, but they didn't pay very well.
So true. Yeah.
So I was recruited by a local savings and loan, and that got me more into the lending side of things than the operational side of things. And so I did that actually worked for two different ones. Really, when the savings and loan industry was melting down, and I was a little frustrated working for these savings and loans during that time because you needed corporate approval to buy paper clips, and they really had you
Under their thumb, for sure.
For sure, yeah. So this is kind of a neat story. I had lunch one day with a realtor buddy of mine, and was bemoaning the fact that I was unhappy with what was going on in my job, and said, what I really want to do is move to an area that's recreational, and I'm thinking Minnesota Lake Country, and if I'm going to be a banker and be under the thumb with these people, I want to at least live someplace nice. Grand Forks is got a lot of nice people there, but it's really flat.
And this was still in North Dakota?
North Dakota.
Okay. Yeah.
So, God, it was a week later, this realtor called me. He says, "Hey, Don, there's an ad in a paper for a manager for a savings and loan in Kalispell, Montana." And he says, "I've been there, and it's gorgeous." I never heard of Kalispell, Montana, so I got out my atlas and looked at it.
Back then, they didn't have Google for you to just jump on, see pictures and reviews. No Yelp.
There's a lot of things we didn't have in 1970 that we have today. But anyway, here's this Kalispell, 35 miles from Glacier National Park, and there's this big lake there called Flathead Lake. And so I think, gosh, that's kind of a neat deal. So I sent them a resume, and lo and behold, they called me and invited me out for an interview and offered me the job on the site.
Wow.
And it was the first newly chartered savings and loan in the state of Montana.
Okay.
Since the 30s.
Wow.
And these local people decided they wanted to start their own savings and loan. And so
was that something that was beginning to happen that day and age within this industry? I can't say most, but people were getting the idea of, I think I should start my own, or I think I should break off from the usual.
Oh, I don't think that was so much the case because, again, that was a period of time when savings and loans were really, really been struggling. But the idea of starting a new one, you don't have any of the latent issues that the existing ones had.
Yeah.
And that really intrigued me. So I was excited, and they were excited. And so away we went, moved the family out to Kalispell, Montana, and are still there.
Yeah.
35 years later.
Yeah, and funny, I had never known about Kalispell, Montana until I met you guys, to be honest. We flew into there, and it was like, wow, this is beautiful. Holy cow.
And not only that, it's just good people there.
Yeah.
It's just good old folk.
It's true.
And you don't have a lot of bad guys there.
Yeah.
So anyway, I went to work for the savings and loan and enjoyed it, but it was the same under the thumb thing. I'm a worker bee, and the owners are the owners, and actually they started doing some things that were inappropriate, I thought, and so I had to make a call to the regulators to say, hey, this thing is getting a little out of control. I don't want to be blamed for this,
right?
And so they came in and looked, and they agreed, and the owners blamed me for that problem, and invited me to move on. And actually, the savings loan lasted 2 more years, then they had to shut them down.
Wow.
So there I am in beautiful Kalispell, Montana, looking for a job, and went to work for a guy who had a mortgage company.
So at that time, working for the savings and loan place, were you writing loans just yet, or were still on the operations kind of overseeing?
I was the lender.
Okay.
Yeah,
okay.
Yeah. And so, I mean, that part of it was fun. Anyway, so I through that time period with the savings and loan, I had met these guys that owned this mortgage company, and we didn't have mortgage companies in North Dakota. And I really enjoyed the principles of it all, and that it's a sales job,
Yeah,
and you're paid for selling,
that's right.
and bankers just are never paid commissions, and so I went to work for this guy and did very well with it, and I didn't make a zillion dollars, but I did pretty well. I was
Sure.
I was pleased with the income, but all of a sudden I started getting collection calls, or the cute little girl that sells radio advertising comes in and says, "Hey, Don, you haven't paid your bill yet, and if you don't pay it by Friday, I don't get my commission." And I tried to explain to her I don't run the checkbook; I just work here.
Yeah.
So I'd call the boss and say, "Hey, boss, what's going on?" And he says, "Well, it's just a little tight right now." Uh, Same thing happened to the I couldn't get my copy machine repaired because they hadn't paid the bill last
Mm.
time, and so I knew this company was having some financial troubles.
When about was that? What time period?
That was 83,
Okay.
84.
Good deal. We'll keep a timeline going because I would love to see how history tends to repeat itself eventually, and let's see if it does. But go ahead, continue.
So one day, I'm about 3 years into this thing, and one day it's announced that the company is being bought by another guy. And of course, I don't know why and what's going on exactly, other than I know that they aren't paying their bills.
Right.
So new guy takes over, and we show up the next day working for a whole new company. I thought, well, gee, the owner is supposedly a superstar financial trader.
Mm.
So away we go, and we're a couple years into this new guy, and same thing's happening. This company had tried to branch out and to increase volumes, and but they weren't paying people fairly,
Mm.
and so I always like to say that I learned from some experts on how not to do things.
Yeah.
And so I sat down with the boss of the second company and said, "Geez, it's really hard when your reputation on the street is you don't pay your bills." And his response was, "Ah, a lot of companies in Montana don't pay their bills." And
Wow.
so I told him I didn't think that was a very good idea.
Right.
And found myself out on the street again.
Yeah, I mean, how weird is that concept? We're here writing loans for people that are supposed to be paying their mortgage eventually. I mean, typically after 45 to 60 days after close, you got to make the first payment, and then every month after that, most of the time for 30 years. And you've got a leader at the time that is nonchalant about the principle that you're lending on.
Right. So, when you find yourself out on the street, you do a little soul searching.
Yeah.
What am I going to do next, Don? And I liked the business. I really did. It was a very rewarding business, and just helping people.
Yeah.
And so I thought, a little help from some friends, and they said, "Well, why don't you do your own thing?" I didn't have a lot of money, but so happened that I did have a boat. And the famous Don Mann boat story.
And I'd love to hear it, but before you do, let me bring this bad boy up so the camera crew can see this. So I won this little bad boy right here in a drawing at one of the meetings that we had. Matter of fact, it was in Florida. That my name was called, and I was in the restroom. When I came back from the restroom, Kristen said, "Look, you won this." I went, "What is this?" She said, "I don't know." So as I got to talking, there were all a bunch of different moments that essentially made Mann Mortgage. And look right here, if you guys can see that, there's a boat, and Don's going to tell you about this. Go ahead, Don.
So I had invited my family from North Dakota out for a week on Flathead Lake.
Okay.
And rented a cabin and had my boat there, of course. And it was the seventh day of the rental period, and my family left that day. And so there was one more night to be had at this lake place. And So I'm sitting on the deck with a friend and just having a toddy, and the storm happens, and it's like 100-year storm or 500-year storm
Oh,
on
wow.
Flathead Lake. And next thing I know, there's these huge waves coming in at us. Flathead Lake's a very big,
It's a massive lake. Yes.
lake. Yeah. So when it storms, you get some pretty good sized waves. And here's my boat tied up to the dock with ski rope. And, anyway,
Whatever you could find at the time.
so next thing I know, my boat is on the shore getting smashed by waves. And you can't pick up your boat physically, so just go back up on
Piece by piece, maybe.
you go back up on the deck and have another beer.
There you go.
So that's pretty much what happened. I woke up the next morning and went out to see what I had left, and my boat was half full of sand, and the other half was water, and the glass had been broken out of it. The whole left side of the boat had a big long crack in the fiberglass. Luckily, I was smart enough to have insurance on the boat, and so I had the insurance man come out and look at it, and he totaled the boat, gave me $7,000 for the boat.
Now, mind you, back in, this is probably 1984, 85-ish.
It's 88.
88, okay.
89. It's actually 89.
So 1989 is when the boat took place, and I'm keeping a timeline of this for a reason. And $7,000 is what came of this because of them insurance adjuster totaling that out. Okay, go ahead.
But let me keep the boat.
Okay.
And so I have a friend that does boat repairs. So I took the boat to him, and for $2,000, he kind of fixed it. The boat was cheesy when he was done, but it worked.
It runs.
It ran.
It's a boat.
Yeah,
kind of like this. Your buddies are like, I don't know about that boat, and you're like, do you have a boat? I don't think so.
No, it works. It
That's
floats,
right. That's right.
That's an important thing with a boat.
That's true.
It's got to float.
Buoyant.
Yeah. So anyway, I put $5,000 in my pocket, and this is about the time I'm struggling with what to do, and that gave me the financial cushion that I felt I needed. My wife was a school teacher.
Okay.
And so between her and my faith that I could originate loans, I got set up as a broker.
Okay.
Got my FHA ticket as a mini. They call it Mini Eagle.
Okay.
And so November 15th, 1989, I'm in business. And I had gone looking for a location, and when you only have $5,000, you
limited.
You're
slim pickings.
And I'm a conservative person anyway.
Sure.
So I find this. It's a one-room office in a former mortuary.
Oh goodness! Wow.
It had been converted to an office building. So I moved in there, and business was dead. No,
I was going to say that's the one place that most go to die. You went there to thrive.
Yeah. Somebody had to say that.
That's awesome. Yes.
So yeah, I opened my business. My business cards were M&Ms. And my marketing plan was I got glass jars and filled them up with M&Ms and took them to every real estate office.
Really?
And said, when you run out of M&Ms, holler, and I'll come back and fill up your jar.
How cool!
And that worked. Except I drop it off in the morning. They'd call me in the afternoon.
We're out already.
Anyway, so I was the chief cook and bottle washer, an individual, all by myself, and the landlord of the building was a friend, and he furnished me a desk and a chair. Furnished me a phone. It was a multi-line phone that he had for the building.
Okay.
So he would answer my phone if I was out of the office, and had a copy machine that I could use so much per copy, and a fax machine, so my rent was $250 a month.
Wow. Okay.
So $250 a month, and I'm in business.
Heck yeah. Matter of fact, you had enough savings to last a little while without even any production.
Yeah, I had to eat a little bit
True.
too. But so, yeah, away I went.
So Don, let me ask you, when you got set up as a broker and today's world and that world are totally night and day, but at that time, brokers still were using other people's money essentially to fund the loans. They were connecting the investor to the consumer's file, so to speak, and handing them off. With you, was it the same kind of concept? You guys, because being a non-mortgage banker, you didn't have to have warehouse lines because the investor had all that stuff stood up for you.
Actually, my first source was a bank.
Okay.
In Great Falls, Montana. The president of the bank was a friend.
Makes sense.
Common theme there.
Yeah.
Guys
It's true.
Guys got to have friends.
Yeah, it's not what you know, it's who you know.
Yeah. So he sponsored me, and I would originate the loan and ship it over to him, and he would underwrite it, or his staff would underwrite it, and hopefully approve it, and close the loan.
Now, back then, I'm sure there were somewhat of guidelines, nowhere near as stringent as they are today. What were some of the deciding factors of whether a loan would get approved or not? I mean, I would imagine back then, didn't they require 20% on every loan? Was there anything like that for first-time home buyers?
Well, there was still, the FHA program.
Okay.
There, and VA program.
Okay.
That was pretty much it. And,
Yeah.
And then conventional lending you could do conventional with MI back then,
right?
95%ers, but the conventional with MI just wasn't necessary because the FHA program was far better than that. And I did a ton of FHA lending.
Yeah.
And it was a great program.
Absolutely.
They were probably more lenient in underwriting than a conventional underwriting.
Still are to this day. Yep.
Yeah. And so that's their purpose,
Yeah.
right? They're created by the government to help people get into houses.
Right.
And so it's always been an awesome program. So I did a lot of that, and probably experienced more conservative underwriting within the banking world. And so it didn't take long for me to start the search for more traditional broker outlets.
Sure.
And so, that's what I did.
Now, back then, do you remember what rates were around roughly?
They were 12.
Okay.
12-ish, and in fact, I've just been amazed that since I started Mann Mortgage 35 years ago, it seems like rates keep trickling on down. And gosh, I had customers that I had refinanced 4 or 5 times.
Yeah.
Did them at 12, and then we refinance at 10, and then
they just kept going.
6, and yeah. So it was kind of an amazing time to start a business.
Sure.
Just fortunate.
Timing is everything, as many would say, those that have experienced. And I guess the line of questioning for this is to bring out that experience, because we've only been through what we have, and the only way to learn from others is if they share, because if not, you got to go through it yourself. And I am one that typically does go through it myself and tries to learn the first time. But if there are any roadblocks or any landmines that others have stepped on, my goal is to listen because they've done it before, and to avoid because I know what it's going to do. I'm not trying to get my leg blown off, theoretically. But yeah, so from that point of you're starting to thrive, it was still you yourself. Where was the change or shift to growing?
So after a year of doing it on my own, thankfully I was successful.
Yeah.
Because I had been in the business in the area and just working for others, and so I worked hard at it.
I can imagine that you were a pretty likable guy too.
Well, I don't know about that, but my little M&M thing worked, and I went to all the MLS meetings with realtors and did a lot of door knocking and put ads in the paper, and So yeah, I mean, it worked, and but I'm swamped, right? And I spent a year really working my tail off to get this all done,
Yeah.
um, because I was chief cook and bottle washer, right? And
Everything.
everything. So about a year later, a guy walks in the door, and he was a friendly competitor, and his name is Tom.
Friendly competitor. I like that.
Yeah, he was a good guy.
Yeah.
We'd shoot the bull at MLS meetings and
Yeah.
whatnot.
I think competition is good in our industry. Without competition, there is no market. I mean, it essentially is a monopoly, and that's not what we have here. There's competition that allows us to kick different ideas off each other. And honestly, that's what this show is about. This podcast is about melting pot. Share your ideas, because there becomes a certain point in one's career that it's gotten so difficult that you can share it without any kind of fear of somebody duplicating it. And if they do, more power to them. I mean, at the end of the day, I know what it took to get here. So if you can do it too, hey, good job, man.
Yeah.
So yeah.
Anyway, so Tom comes in, and he was unhappy with his employer. His employer was having financial troubles, and so he says, you got your own thing here, Don. Can I join you? Well, yeah, because I was ready for help, right? I needed a loan processor person. But to do that, I had to move out totally of my one room, $250 overhead. And I needed to buy a phone and a desk and
Fax and
a fax
printer.
machine and printers and all this stuff. Well, actually, we didn't have printers back then.
Oh, I believe that. Okay.
Because we didn't have computers.
No computer. Yeah.
We had Xerox.
That's the true definition of sign here, press hard. And the press hard was so it can go through all 3-4 sheets of that paper.
Yeah. They came out with that Xerox paper, so you didn't have to use carbon stuff anymore.
Yeah.
And IBM Selectrics. I don't know if you remember those.
I remember, never seen one, but yes.
A museum around here.
Probably so.
Anyway, it was going to be a big move.
Okay.
Overhead wise, and I was comfortable with it, but didn't
big move, but big risk. I mean, I think that needs to be said. It's a risk. At the end of the day, if this doesn't pan out, it's your ass.
Yeah. So Tom had recently bought out a private money lending person.
Okay.
And with that came 4 or 5 desks, a copy machine, a fax machine, a phone system. So he says, Don, I got all that stuff. I mean, it was
purchased, depreciated, and now it's yours.
It's cheesy. Yeah. It was, but yeah. So we moved into a new office that had enough room for a processor. Hired a processor. And my deal with Tom was, hey, listen, the overhead, you and I are going to split the overhead 50-50. Whether you do one loan or 100 loans, or whether I do one or 100. 50-50. And so that was our deal. And so all of the income generated from the loans I originated was mine, and same with him. And so that was our relationship to start with. And he was happy with that, and it worked out fine.
Pretty straightforward.
Yeah.
Yeah. Go ahead.
So we did that for a year and a half maybe. And a lady that I had worked with at one of the previous mortgage companies lived in Helena.
Okay.
And Julie was her name. And so Julie had been working for a bank and was frustrated the same way that we all were.
I'm hearing the same tune there. Yeah.
So she calls and says, hey, Don, you kind of got your thing going there. And can I join you? Oh, okay. So I explained to her our deal, and the same deal Tom and I had, Julie and Tom and I would have. And so Julie joined us. And so now we have two
33.333. Yeah.
Yeah. So, gosh, it wasn't, I don't know, 3-4 months later, a guy in Missoula who we kind of knew called and said, hey, Don, I know you got Julie and you. can I get in on this deal?
Okay. So you were building an A-team, basically.
Yeah. And I, did zero marketing.
Right.
I just answered the phone.
Hey, I'd rather be lucky than good any day.
Yeah. There's a common theme there. I'm going to talk about that later. But,
Okay.
That's how we started. 6 months later, a guy from Billings, Montana called. And, he wanted to join us, and same with Great Falls. So all of a sudden, we have 4 or 5 branches in Montana, and been doing pretty well with it. All good seasoned people.
Yeah.
That have been in the business for a while, and you recognize that volume speaks volume.
Absolutely.
You kind of get people's attention. When I'm Don Mann, one horse show operating out of a mortuary,
Raising the dead.
nobody was too excited, but all of a sudden we got 5 locations and we're doing some significant volume. So we could expand our broker world, but all the time recognizing that we needed to get into more of a mortgage banking mode. We need to develop warehouse lines and do our own underwriting, and that's
a good time for this question is, what was the deciding factor, or what was the writing on the wall that you guys started to experience that you even understood or started having that conversation of, okay, we've been brokers, we're doing well, but it's time to possibly look at switching over to mortgage banker side of things, and warehouse lines come along. What was the tipping point?
I think for the most part, it's underwriting.
Okay.
Conservative underwriting. The broker world, I think, has more conservative underwriting, but also being in control.
Okay.
Not relying on some company in Denver, Colorado to type up your closing documents and ship them out to you in a timely manner.
Yeah.
And if we could do that on our own, we can prioritize, or, we can work overtime if necessary to get it done. And so that the mortgage banking side of that just allowed so much more freedom.
Yeah.
With that. So,
freedom, but at the same time, more control as well.
yeah.
That's weird how that works. You get more freedom, but you also get more control.
Right.
You'd think it'd be opposite, but it makes perfect sense.
So we, at that point, developed the net worth by hook or by crook to get our full FHA ticket.
Okay.
And ironically, this lady from California, whose mother lived in the Flathead Valley, knocks on my door one day and says, "I work for a company called First Collateral Warehouse Lending, and you need a warehouse line?"
Wow. Rather be lucky than good any day.
Absolutely. It was just, we were sitting there, where are we going to get a warehouse line? And so this lady walks in, and bingo, there we were.
So I want to pause there for a moment to explain to the listeners what a warehouse line is. The difference between mortgage banker and mortgage broker is mortgage brokers use the investors' funds to fund the deals. Matter of fact, they use the investors' underwriters, sometimes processors, etc. Whereas mortgage bankers, like what we are on this side of the tracks, we have our own. Now, it's not we have our own big pile of cash and we're funding all of these deals. You have enough cash that allows you to leverage and create warehouse lines that then open up the door for larger funnels, larger funding ventures, the ability to fund more loans in a shorter period of time and not having to wait for the money to clear off the books, essentially. Am I right on that?
Yeah.
Okay.
Yeah.
Very good.
So it's short-term borrowing.
There you go.
So you can write a check on day of closing, and then that money is outstanding until you eventually sell the loan.
Right.
Which usually happens in a couple of weeks.
Right.
So anyway, yeah, we developed the warehouse line, and the lady in Helena was also an underwriter, and so she was excellent at underwriting and excellent at operational things, and so we were full-fledged mortgage banking firm.
Wow, pretty quick.
Pretty quick, and this was about 93.
Okay.
So
Yeah.
probably the next significant thing that happened to us was an account rep for Bank United um, called on us. He was a guy out of Portland, Oregon, and had heard about us, right? Because we're doing
The buzz is going around.
and so he knocked on our door and said, I want you to send deals to us. And so, in shooting the bull with him, I explained to him our business model and what we're doing. And he says, I like that. He says, I think I can sell that. So he joined us and hit the road and started developing branches for us outside of the state of Montana.
Gotcha. Okay.
So a lot of them were Bank United branch offices, and yeah, all of a sudden we had, I don't know, 8, 10 branches all over the place, and that's really, kind of what we're doing today. Right?
It's true. Yeah. And one of the reasons why, and I've said it before, that attracted me to Mann Mortgage and what you guys are building is the philosophy that you guys have, the mission statement or the core values that you promote every single day in what we do. The fact that you've got the entrepreneurial spirit, celebrate, ease of doing business. These things are something that should be almost basic principles in what we do, especially someone that wants to own their own business and operate within the means of that company that's backing them. And I think a lot of folks take that stuff for granted because they go to certain mortgage companies with the promise of things like this or the promise of the philosophy being that way. But thus far, I mean, I'm almost 2 years into this, and Mann Mortgage walks the walk and talks the talk. Of course, their shit stinks like everybody else, but from a standpoint of leadership and transparency and full autonomy, I think it's something that you guys have done a great job in doing. And for you, you grew that in a very small place in the United States that caught fire essentially and spread throughout the United States. And now we are here in Texas, however many hundreds of miles away from home. But yet the mission, the philosophy, and the core values are still resonating from what you guys built,
Yeah, you're right on. The people that joined me a little at a time were not rookies in the business. They were well-seasoned people that knew the business, and it was comfortable that they knew what they were doing and that they would take good care of our customers. And so that philosophy or that part of recruiting new branches is permeated throughout the company. We don't want to hire somebody that doesn't know how to spell mortgage.
Right. Don't forget the T. That's right.
Mort.
That's right.
Yeah. So that, yeah, it's worked. And then, like I mentioned, having worked for the other companies who all of a sudden aren't paying their bills, it was important to me, and being conservative, that we managed our cash appropriately and had retained profits within the company so that we didn't have those kinds of problems. We've never had a problem paying our bills and that type of thing. So it's like I said, it's a company it's grown from those that didn't do it.
You're right, and I think the saying is pigs get fat and hogs get slaughtered, and I think it's very easy for anyone with success in this industry to become very hoggish, and for you guys, there is a obvious sense of that conservative mindset mentality because there's been some tough times throughout the mortgage industry in time. We can talk about 2008. We can talk about what we're going through now, but have still been able to sustain and withstand all of these, I don't know, we'll call it bullshit that goes on in our business, right? So that being the case, were you still over Mann mortgage at the time of the 2008 crisis.
Oh, yes.
What was that like? Can you take me? Because I will tell you, I wasn't in the industry just then. I was working at Chase Bank as a business banker at the time. And for me, I noticed, well, people aren't buying houses right now. Doesn't affect me much. And at the time, I wasn't I was old enough to buy a house. Matter of fact, I ended up buying one 2 years later. I think that was our first home. But it was different from what we do and how we operate today.
So what happened in years leading up to 2008 is pretty much Wall Street created a thing called subprime lending.
Mm-hmm.
They came up with loan programs that is basically fog a mirror and we'll give you a home loan. And what that did was kind of fired up people to speculate. And the kind of the industry took off. And we didn't like those programs
Makes sense.
because it's still important to us and anybody that's a professional in this business is you don't just make a loan to somebody because they want it.
Right.
It's important that you make a loan to somebody who deserves a loan
Right.
and qualifies for that loan, and you feel comfortable that you're not putting them into a situation where they're going to have a trouble making their payments.
Right.
And all of the things that happen after that. That's just not good business.
No, I agree. And I think the biggest piece to that, and I'm glad you parlayed them, which is deserving. And I hear it all the time, but they deserve it. They deserve it. Okay, great. Do they qualify? And that is the big piece that most were missing. They all deserve it. Well, we all deserve it, but do they qualify? And that was something that, as an onlooker at the industry at that time, and then I watched things like The Big Short, and you go, holy cow, that's how it was? Like, that guy was a waiter, and now he's buying multiple properties, et cetera, because he's able to write any type of loan. Well, that catches up to you. And I think it caught up to the whole industry at that time. And you guys didn't receive any bailout money or anything like that. So that tells me that you were writing decent loans, or at least good enough loans, that you didn't have to undertake these massive losses when the time came that the industry shifted. It changed.
Yeah, that's right on. Exactly. And so, yeah, our decision to be conservative in that era was worthwhile because, and it was a little frustrating. You lose a deal to somebody who would make one of these oddball loans, but people were buying houses in anticipation of holding on to them for a year because appreciation in the housing industry was so rampant that it just a year later they could turn around and sell that house and make huge profits.
Yeah.
And when they did it, they tell their buddy about it. I said, buddy, I want to do that too.
Yep.
And so people that could no way afford this kind of thing were doing that. And so there was loan programs with adjustable rates where the initial rate was really, really low. So the payment was really low. So these speculators could afford to make the payments for that year. There was even a negative amortization loan.
Oh, wow.
I don't know if you've ever heard.
No, I've heard of them, but you bringing it up brings me back to the concept of what it even is. And it's so bass-ackwards, it's crazy.
Yeah, you'd set up with monthly payments less than what it takes just to pay the interest.
Right.
So
where are we going from here?
If you borrowed $100,000 at the end of a year, you probably owe $110,000 on the loan because that negative payment there that wasn't even paying the interest was accumulating with the principal.
Right. And at the time, the concept or the mindset of investors, the ones actually funding these loans and buying these loans, were, you don't miss your mortgage payment. Everybody pays their house. What are you talking about? Well, they do, but they pay their house, not the other three that they purchased in addition to that one.
Well, it's kind of ended up like a musical chairs thing. And all of a sudden the music stopped and all of a sudden those subprime loans went away.
Yeah.
Because they were all terrible, and they were having lots of problems, a lot of losses from those things. People were getting loans that they couldn't possibly pay,
Right.
and it was speculation. And so when the music stopped, that's when the industry took a hit.
And that, I guess that kind of goes back to that conservative mindset that if you built your business, let's face it, on straws and sticks on these speculative loans, well, when it shifted, you didn't know how to sell the normal conservative type loans, the correct loans. So more than likely, most businesses that were in the business of doing loans that way didn't know what the hell to do. Well, if we can't do any loan, how do I even qualify a borrower? Meanwhile, there were companies that were doing it the right way from day one.
Right.
That makes sense.
This is funny. The trade journals would publish what they called an implodometer.
Oh, goodness.
And you ever hear about those?
No, tell me more.
Implodometer would every month they'd list the companies that had gone out of business.
Oh, wow.
Just because they had huge portfolios of this subprime product, and there was no longer a market for it. And that's
right.
where the warehouse people, they got left holding the bag.
Yeah. Hence the bailout money and everything else, because let's face it, mortgage-backed securities, real estate, I think it's like 30 some odd % of United States GDP. So we make the world spin, essentially. And I say that to folks and they're like, I don't really get it, but yeah, sure. No. We really do. There's a lot of money in our economy that is based off of mortgage lending, that is based off of real estate. It's just a simple fact. If you do any kind of research.
Yeah. So, from the time that I got in the business in the 70s, in and around mortgages, there very rarely was there ever a foreclosure. Very rarely. And there was always appreciation, but it was a steady appreciation. And even well into the 80s and the 90s, very rare to have a lot of foreclosure activity. It happens.
Sure.
People would get into a loan with small downs, and then their life would fall apart for some reason. And so they had a hard time selling in some cases, but it was a real rarity until this 2008
debacle. That's what we'll call it. That's right.
Is that a good word? It just annihilated our industry, and those bad actors, and there's plenty of blame to go around, including Fannie and Freddie.
Allowing it. That's right.
Allowing it, and they got a little bit of that involved with that themselves.
It's true.
Because they saw the market going to the Wall Street people instead of to Fannie and Freddie.
Right.
And so as any good government would do,
they want their piece.
Well, yeah. So all of a sudden we've got a huge pile of regulations that we have to live with, and because they don't ever want this to happen again. Right? Well, those in the know, they know there's no longer those wild and crazy loan programs out there, and there's serious qualification processes. So.
Yeah. So now we've gone through that little piece of it. At one point in time, and I don't know if it was a little while ago or recently, but at what point in time did you shift over from CEO, founder, presidente to, all right, guys, it's time to be a professional golf caddy to myself every once in a while and kind of look at things from a further back picture and empower someone to take this over? I mean, at what point in time was that?
Oh, it kind of, it started when I was about 55, and I worked pretty hard.
Sure.
I was 40, I think, when I started Mann Mortgage. And so by the time I'm 55, I got a lot of years in there, and a lot of anguish and a lot of joy.
And they say that we age a little bit faster in this industry because of that.
Yeah, you probably do have more cocktails than anybody.
Yeah, it's true.
So I don't know. I started then, and I suppose in mid 60s, I just decided, it's time. I was fortunate to have a son who had been in the business with me for 20 some years by then, and So I gradually shifted duties to him and started doing less myself. I still am involved, after 35 years, it's your baby and it's tough to not do anything. So I hound on the poor guy once in a while. And, my era, we didn't do things that way. Well, that was 35 years ago, Don. But he's a pretty sharp kid. He takes after his mother.
I believe that.
She was very important and intellectual person. And so anyway, he does a good job. And I'm kind of there to be his
Confidant, liaison, guiding light, sometimes swift kick in the ass.
Yeah. So we get along pretty well, but he's done a great job, and he's got a gift of hiring really good people, and yeah, the company has grown far more under him than it ever did with me. So I'm excited for his involvement, and we also have a grandson in the business now.
Yeah, Mann, yeah.
Tommy Mann, and he's only 27, so he's got a few things to learn. But,
of course. Still wet behind the ears, but he's getting it.
Yeah. So in theory, this thing can go on.
And that is the goal, definitely, especially aligning the people that you guys are doing, keeping that same mentality, philosophy, and overall values that you guys started with. So a couple more questions before we end this thing, and I'm just going to go freestyle with it. At what point in time did you feel that Jason was ready to carry the torch forward?
Oh, if you're visiting with him, not daily, but quite often, and you share things that are going on, from a corporate standpoint, and
Right.
And he started being on our board and listening to the issues, and so it's a gradual learning process for him. But he was also originating at the same time, and he was an excellent originator. Just about every year he'd lead the league, and who's doing what, and it was hard for him to give that up and get into a corporate world. But so it was kind of just a gradual move that we went through.
And that's kind of why I asked that, because most of us top producers, it's hard for us to let go of anything we do in this business. When you're building a team, when it's time to delegate certain things, for you being a producer, converting to the owner, and Jason being a producer, having to give up some of his responsibilities of the top producing hat. Was that difficult for you guys, that transition?
I wouldn't say so. No. We had pretty good lines of communication, and
a lot of straight talk.
Yeah.
There you go.
Yeah. So yeah. Anyway, it's just such a wonderful business, and I got to tell you this story.
Please.
This was about 2 years ago. I'm at a birthday party for Stephanie.
Okay.
Stephanie is, big shot in
Absolutely.
operations, and wonderful lady, and she's probably responsible for recruiting most of our operational staff.
Okay.
We just love her. Anyway.
She's awesome. And matter of fact, her son is in the IT side of things. We were talking about IT stuff earlier today, but yeah.
So I'm at a birthday party for her, and this lady comes up to me and says, "Hi, Don, do you remember me?" And the older you get, the fewer brain cells you got. And so I said, "Well, let's see, help me out here." And she knew I didn't know who she was, but I had done a loan for her probably 25 years before that. 20 years before that. And she was still thanking me for putting that loan together for her. She was a single mom with a disabled child, and she couldn't get anybody else in town to help her.
Yeah.
And 20 years later, you hear those things, and you appreciate that what you're doing isn't a job, and it isn't just a process of making money. You really are helping people.
Yeah.
And people come back to you 4 or 5 years after you did their loan for them, and maybe they were a little marginal going in, but
sure,
4 or 5 years later, their house is appreciated, and they've turned that house into a bigger, fancier house using that
That's
equity,
right.
or they retire and cash in on the sale of that house, all because you helped them out,
Yeah.
right, and helped them get into that first loan, and it's just a very rewarding part of our business.
Don, I'm happy you said that. That's one of the things that, number one, never gets old in this industry thus far. And it's also the thing that sucks you right back in after you've had a tough day or a tough week. And in many cases, for folks around the industry, a tough year sometimes. And I don't think it's just the simple fact of you gave them a loan. You took the time to put that loan together, all that good stuff. But what it really does, and I have experienced this as well, and I believe it's kind of what you're talking about here, which is you open their mindset or the door to the next possibility in their life. And you've got a demographic of folks that have rented all their life, generation after generation after generation, that most of the time they believe that they can't qualify for a loan. They don't know what the first thing to do to get a loan. And it becomes this pipe dream after seeing multiple generations just being renters. This is what we do until that one kind of, like they say, potential only is potential until you take that lid off, and now the potential's out of the bottle. And in this case, and in many cases, that one customer that you come in contact with that you get to experience later down the road in your career, if you still are in the career, in the business, that brings you right back to why you're still doing it. The concept of, yeah, we have way more impact on the economy than most think because of people like that. Opens the door and shows them the opportunity that it could breed, the additional outlets and leverage that they can create down the road. But even more so, she just taught her next generation that it's possible and the chain has been broken, and that's that I don't care who you are. It should resonate with you on a bigger kind of I'm working for something bigger than myself concept. And I love that. I mean, that it shines through in what we do every day. Yeah. So let's talk briefly about and that is a cool. It's not even a story. That's a cool journey of coming to be. I mean, we turned oh shit moment into a oh shit moment, from the boat experience to pocketing a couple of bucks that didn't go to BS. It went to fund the next mission that you had, and it did well. And like we said, we'd rather be lucky than good any day. But I think you have to put yourself in a position to even be lucky. A lot of people would say, oh, that's luck. Well, at the end of the day, you still worked your butt off to put yourself in the position that luck came about, and you were able to seize that moment. That being the case, you've gone through 2008 debacle. I'm sure there was something in the 80s that was not similar, but something that shifted the market and shook the market a bit. And then you fast forward to today, and we've got rates used to be at 3%, almost 2.25%, because of a false reality that was being levered to induce action in our market because of the pandemic. Coming out of that, we've got higher rates that me and my generation have seen, but in the grand scheme of things, they're still relatively low rates. What are your thoughts on what the future holds with mortgage, with technology being implemented into mortgage? And I can't say that it's becoming more difficult to get a home loan, because it's not. It's becoming, how do I put this? We were talking about the American dream earlier today, and I myself still believe in it and preach about it. It's becoming more difficult to relate to people as whether they still see that as a dream or a pipe dream, in the sense that that's not even achievable because everything's so high. What are your thoughts on all that stuff there?
Well, you know, if you've probably been a while since you rented, but
I rented one time. I had gotten back from McMurray University. I was playing football, got back, went to a community college, was living with my parents for maybe 6 months. And I was still 18, maybe just turned 19. And it was time. It was time to move out on my own. I rented for a full year. And at that time, after the year, I went, this is a bunch of BS. I am not getting any of this back. Of course, it was cool to have a pool there and to be able to have people over. And then it just got old. I liked my money and I wanted to see it and I wanted to keep it. And after that first year, at the time, it was me and my girlfriend slash fiance. We weren't even fiance yet. I just told her, hey, look, I'm going to buy a house. Do you want to jump on board or not? Because regardless, I'm done renting. And we ended up buying our first home, USDA, 100% financing. And that ended up making us about 90 grand when we sold it after 7 or so years, 8 years, converted it to a rental after 3 years. And then 3 years later, 4 years later, we sold it. And it was like, we didn't put much into that. We just held it. And the concept of wait to buy real estate. No. I'm an advocate for buy real estate and then wait, you know?
well, I think the 2008 meltdown scared a lot of people, number one, and seemed like the irresponsible lending that was going on kind of permeated throughout the country, and so homes really started depreciating for the first time ever.
Mm-hmm.
I go back, 70.
Sure.
That's quite a while ago.
Yeah.
And it's sad to say.
But it's true.
And so that I think that memory is still there, and people are afraid of that. But yet the story you just told has happened to thousands and thousands and millions of people. They bought a house, they sucked it up and said, "Dang it, I'm tired of the landlord not fixing things and raising the rent all the time and getting mad at me because I parked my car in the wrong spot," or all the things that landlords do, and all of a sudden they're in a house and they're in control,
Right.
right? They can make an improvement if they want. They can do whatever they want with that house, and the affordability factor is important.
Right.
But it's important that they buy the right size of house
I agree. Yes.
and a monthly payment that they're comfortable with, so that they can still go out and party every weekend, or do the traveling or whatever it is that they love to do. It isn't going to be inhibited by the fact that they bought a house.
Right.
But years later, they're going to look back and say, this was a really smart decision that we did. Finally got off the dime and quit being a renter and start owning.
That's true. And I think a lot of the affordability issues that we're seeing today, and a lot of people are comparing it to the income and what you're able to buy or afford. And I believe it has a lot to do with the concept that the next generation or people these days don't understand what sacrifice is to gain later. And most of the people that I have originated a loan for in the past 12, 13 years, first-time home buyers, their lifestyle tends to change once they become a homeowner. And kind of like you alluded to, it's not that they don't go out and party, et cetera, but the party comes to them now. They don't go out and spend the extra money because they're embarrassed that they're still living in an apartment, or they don't want to have the fear of messing up their landlord's home, things of that nature. But you tend to start eating at home more. You tend to start having people over, having gatherings instead of going out to party. Whether they do it for that reason or not, fast forward a couple of years and you look at your tax bill and you go, wait a minute, my house is worth what? Okay, so there's some equity here. What can I do with that equity? And then the conversations start to expand. The mindset starts to expand. And kind of like you talked about a bit ago, that then trickles down to the next generation and next generation. And what I'm a big advocate for and what I'm preaching these days is for people to understand that it's not an overnight thing. You've got to sacrifice a little bit. You've got to buy within your means. No, it's not going to get you the $300,000 home it did in the last 3 years because rates were damn near zero. We're now back to reality where equity is going to continue to rise. And regardless if it's at a slow pace or a fast pace, it's still rising, and a whole lot more money you're going to get than paying rent or even having money in a savings account, to be honest. Yeah, it's a tough concept for many to get. And I believe that we as loan originators, as experts, have to continue to sing the same tune, give the life examples to these folks until they get it. Because if we allow the, let's call it bigger corporations that are in the business of buying homes continue to outpace the first-time home buyers, they're going to be left forever renters, unfortunately.
Well, it's tough. I know prices of homes have accelerated to unbelievable levels, really, but so have incomes.
Right.
You know, gosh, they just raised the minimum wage at McDonald's to $20.
Unbelievable. Hey, Don, I'm about to retire and go open up my own McDonald's. Be an employee. How are the benefits?
If I just liked those hamburgers.
Yeah.
But you know, I've always told people, you know, your house payment's really the first payment you make, because once you're into this thing, you're not going to let it go. You're going to fight the tooth and nail to hang on to that house. Some of your other things may suffer.
Sure.
But you're going to make that house payment first. And,
yeah.
I mean, how many customers have come to you to buy a house and they've got one of those big fancy $100,000 pickups with the big wheels?
Because we're in Texas, too many.
They got what, 12,
oh yeah, they working in the oil fields, and all of a sudden they get their first big check and they go buy that truck.
And they got $1,200-$1,500 a month payment on that big truck.
It's true.
And then they're worrying about a house payment. You know, it's a priorities thing. You know.
Yeah.
They're cool driving around in their pickup with the big tires, but
that's depreciating, by the way.
That's depreciating. You bet. And you know, do they make the truck payment first?
That's true.
No, they're going to make their house payment first.
That's right, because you got to have somewhere to park that truck.
Yeah.
Well, Don, this has been great. I think we talked about quite a bit. I mean, we went from 1970 all the way 1983 and all the milestones in between that has stood Mann Mortgage up for what it is today. And honestly, I'm proud to hang my DBA under Mann Mortgage. And the coolest part is I don't feel like I'm under you. I feel like we are all on the same level, on the same page, and have the ability to voice our opinions, our thoughts, and solutions. Because at the end of the day, I don't think a loan officer is just a loan officer. We're problem solvers, baby. That's what we do. And if you're not good at solving problems, chances are you're not going to be a good loan officer. So is there anything else that you'd like to let the folks know about? Maybe anybody back at corporate office, anything like that? Now's the chance.
No, you know, our job corporately is just to support you. You know, I want to have a back room that takes care of you. When you have a customer that comes in here and needs to close a loan in 2 weeks, we can get that done. We really can. And I got to keep you operating in the fence line.
Yeah, of course.
You know, because we all have regulations to deal with, and you can't go crossways with regulations, and we're very emphatic on that because we don't want to lose this because we're doing bad things. So, but you know, our job is to make you shine. You know, and we want your feedback. You know, the corporate world sometimes gets tunnel vision, and they don't really understand what's going on in the world. You know, and my son tells me that all the time. Like I said, that the way we're doing things today isn't at all like they were
Sure.
when I was in charge, and he tells me to suck it up and understand. So, but yeah, I mean, our corporate role, and I think we do a pretty darn good job of it, is to make you shine and make sure that your customers get a good deal and they aren't losing a purchase on a house because we haven't done our job right, doesn't close when it's supposed to close, and we're proud of our back room and the way that they handle things, the sources that we get our money from, and so that the pricing that we offer to our customers is very, very competitive, because again, volume speaks volumes.
That's right.
And so that's another part of our success, is we have worked hard at doing that. And so it's just overall, I think that's why Mann Mortgage is around 35 years after I stepped in the mortuary and started passing out M&Ms.
That's very cool. How cool of a story. Well, Don, I want to thank you for taking the time and sharing what you have thus far. I'm looking forward to the continued journeys that I get to go down with you guys, and also be a part of. It's a cool concept, to have like-minded individuals in different states that have the same mindset or on the same page, and if we're not, have the ability to voice those opinions, and they're taken seriously. So I want to thank you for that, for creating something so freaking badass that it allows me to kind of go, this is the place, That being the case, ladies and gentlemen, I hope you got something out of this. I'm not saying to go out there and open your own mortgage company or anything like that, but if you're an originator out there and you want to learn more about what we do as a company, both iThink Mortgage and Mann Mortgage, you can just visit mannmortgage.com. They're kind of a big deal. They're kind of the man in Montana, so to speak. And like I said, you heard it here from the National Regional Manager of Beverage and Golf Coordination, Mr. Don Mann. That being the case, guys, we will catch you on the next one. Welcome to Key Factors Podcast, where knowledge meets ambition in the fast-paced world of real estate and mortgage. I'm your host, Mark Jones, bringing you the latest insight, trends, and expert advice to navigate this dynamic property market. In each episode, we dive deep into the heart of the industry, dissecting market movement, exploring investment strategies, and unlocking the secret to real estate success. Whether you're a seasoned professional, an aspiring investor, or simply looking to stay ahead of the curve, this is the ultimate guide to making informed decisions in the world of property and real estate. So grab a seat and let's uncover the key factors that make all the difference. Welcome to Key Factors Podcast. Let the journey begin.